Once more, the Middle East crisis will expend the world. Peace and human being are in serious trouble. Talking about world crisis and not mentioning economics and finance just sound like joke. As tensions explode between Iran and Israel, the world is just spectator, but the markets react. Behind every missile and threat, there's a ripple through oil prices, global trade, inflation, and investor confidence. Welcome back, everyone. In this video, we'll uncover how the Iran-Israel conflict affects the global economy, which sectors are hit the hardest, and how everyday people and governments are already feeling the shock. Let's dive into it. Let's start with the most immediate impact: oil. After the conflict escalated, oil prices jumped by nearly 7% in just a few days, according to Reuters. Traders fear a possible shutdown of the Strait of Hormuz, where over 20% of global oil supply flows through. If Iran blocks this route, oil prices could spike to $100 or even $150 per barrel, warned analysts from Bloomberg and Nikkei Asia. Higher oil means higher costs for fuel, transportation, manufacturing, and even food. With oil and gas becoming more expensive, inflation becomes the next big threat. According to the Economic Times, central banks around the world are now under pressure to either hike interest rates again or risk letting inflation spiral. This comes right when many countries, including the US, EU, and also a country like Bangladesh, were starting to cool inflation. Higher energy prices lead to supply chain costs, rising product prices, and tighter consumer spending. Wars trigger fear, and fear moves money. According to CNBC and Reuters, investors pulled money out of stocks and rushed toward gold, US dollars, and government bonds, the classic safe haven assets. Gold rose nearly 4% in the first week after the conflict reignited, and Bangkok Post reported similar moves in Asian markets. This shift weakens risk assets, like tech stocks and emerging market currencies, including the Bangladeshi, Taka, and Indian rupee. Conflict in this region doesn't just impact oil, it chokes shipping and trade routes. According to Al Jazeera and South China Morning Post, some cargo ships have already rerouted from Gulf routes, increasing delivery times and insurance premiums. This drives up shipping costs, delays product availability, and creates friction in everything from electronics to clothing. Globalization makes every country vulnerable to regional conflict. Not everyone loses during war. Defense and energy sectors are surging. Arms manufacturers and oil companies are seeing stock gains. According to MarketWatch, defense stocks like Lockheed Martin and Israeli defense firms have climbed sharply. It can behave similar with Asian countries' defense industry. Meanwhile, tourism, airlines, and consumer tech are taking a hit. Asian outlets like Nikkei Asia highlight how regional economies in East Asia are bracing for higher energy import bills and trade shocks. Winners: oil, weapons, cybersecurity. Losers: airlines, retail, tourism, and small businesses. Even if you're far from the Middle East, your fuel cost, grocery bill, or investment returns are already feeling the tremor. Watch oil prices in your country. Expect volatility in stock markets. And monitor currency swings, especially if you earn, send, or save in foreign currency. This isn't fear, it's financial awareness. In a shocking escalation, the United States has launched direct strikes on Iranian military assets. According to Reuters and BBC, this marks the first time in decades that U.S. forces have openly entered conflict against Iran on such a scale. Markets reacted immediately. Gold surged past recent highs, oil futures climbed above $100, and the volatility index, VIX, spiked, signaling investor panic. This conflict is no longer regional. It's tipping toward geopolitical crisis. This is where it gets even more complex. As reported by South China Morning Post and Al Mayadeen, there are growing signs of a diplomatic and military alignment between China, Russia, and North Korea all expressing support for Iran's sovereignty and condemning Western aggression. Analysts from Straits Times and Nikkei Asia warn that if this alliance grows stronger, we could see proxy trade wars, cyber warfare, or even financial sanctions being weaponized. This could push the world economy into a multipolar fragmentation dividing East and West trade, finance, and technology. So what does all this mean in the long run? Economists from Brookings, Chatham House, and Asian Development Bank suggest we may be entering a new era of persistent oil and gas price volatility, redefined trade alliances, currency instability, and even the emergence of alternative financial systems to bypass Western-led banking networks like SWIFT. In short, this war could reshape global finance as we know it. The Iran-Israel war is no longer just a flashpoint. It's a global shockwave with military, economic, and financial consequences. As superpowers position themselves, the world stands at the edge of a new economic order. This is why we need smart finance, simple sense now more than ever. Like, share, and subscribe for updates that matter. This is FINE-SEN,